All right, this is going to be a quick review of yesterday's price action. So these zones and boxes you see on the chart, these are the CIPHER buying and selling zones, right? So obviously selling zones, buying zones, HB stands for high probability. That's added to the features list for the latest update. I think this is two zones overlapping, which gives it better confluence. So let's read what happened from the 8:30 open yesterday. So 8:30 opened, no retracement, just dropped straight away, right? Whenever 8:30 drops straight away, I'm looking at where is it dropping into. Clearly, it dropped into a buying zone or places where they should bounce, not necessarily make a full-time reversal or a large reversal. All I'm looking for is bounces, right? Because this is the first run lower, I am looking for I'm looking to buy below a low. But how I like to use the CIPHER zones is I want to close below 50% of the zone. Then I want to see some sort of low swept and FEGs created or FEGs filled, right? So this did not actually close below 50%, I don't think, right? It did not, right? It just wicks. I want to see closing below 50% because that tells me sellers are in that move and sellers need to be trapped if there's going to be a reversal there, right? So this, nothing here. Let people get in here and create liquidity. You don't want to be the first idiot in, which is always why we need sweep, right? So this is the candle that does the sweeping. All I'm trying to ascertain is, are we trying to push lower after that, right? So I put a candle, sorry, put a line at the end of this candle. I'm figuring out whether in live price action, it's easier to see this after the fact, right? But I'm trying to figure out if that is important, right? We expand or we don't expand below, sorry, we print two down candles, right? If they print a gap below there, then I'm no longer interested in buys, right? They don't. This rejects, prints a low, sweeps that low, and then closes the FEG. So I am looking at buying scalps in here. I mean, that's not even a scalp, that's 60 point long, right? And this is something I've explained in my other videos of how, in the order of operations, I want FEGs to be filled, right? So again, this comes back and I'm making a decision at the lowest low here, which is why my line was there, right? Failing to close, and then we get a proper reversal. But I'm not about that life of playing all this. If I'm in and out very quickly and I'm done, right? So now let's look at the London cycle. So 345 to 451. 345 is here. 451 is here, right? So what has happened during this period of time? Let's draw a box around it. Box is there. Cool. A lot of the times what you find is price gets held within that range or does nothing, right? I'm waiting for that range to form and then trading what happens after it. We open within the previous cycle, right? We open within the previous cycle, and this is where, this high is where I want to see reversals, right? And this low is where I want to see reversals. But instead, what do we get here? Let me mark out the high. We close above retrace, and then we print consecutive gaps. You see that? Consecutive gaps are important because they show buyers interested, right? If you look at a book map, if you look at level 2 data, etc., when you see consecutive FGs, that is the market tipping its hand that buyers are actually in the move, right? So anything here, any retracements, I want to be buying. So potential continuations. All right. This low is somewhere I'll be watching, right? We expand through that violently. Here, big gap stays open. If this wick had come up here, I could have shorted, but I don't like trading so close to market open. I want to wait at least 15 minutes after market open to start trading. Okay. Yeah, hopefully that makes sense. I'm going to be adding more features, etc., as we move through the months. But yeah, let me know if you have any questions. Put in the comments if you catch the short, if you caught the short, if you caught the long, let me know. Talk soon.